Hey guys, Mike here. So market continues to rally. It's definitely an interesting rally, and I'll show you what I mean by that, and also show you, I think it was going to become a daily occurrence, and I'll just keep you up to date in what I'm talking about here. But I also took the time to actually pull up some charts, and I was looking at the NASDAQ, and I was looking at the weekly, and I was like, wow. I mean, when you look at the weekly and you really go back a number of years and you look at it, it'll kind of shed a light on some things and make you see some stuff, because that's what I like about the weekly and monthly views. And so I put together a couple of charts for you to let you see that, yeah, history doesn't repeat, but it sure does rhyme. I'm going to show you what I'm talking about. And then I'm going to show you, there is light at the end of the tunnel. Yeah, light at the end of the tunnel. How about that? And glimmers of hope here. I'm going to show you what actually happens when inflation actually comes down, how the market reacts, and also, of course, how the market reacts when inflation does not come down versus everything else, because it isn't these interest rates and the rolling off the balance sheets is the biggest threat to us. It is inflation. Like, if it stays around for a long time, that we're in deep trouble. That's just the truth, okay? And the economy will be a hot mess, and we'll be in stagflation, which is the worst of all, where you keep these high costs and then the economy starts slowing down, right? And your growth slows, and that is not where you want to be, okay? And I'll show you the Paul Volcker moment if you've never seen it. So I think you'll like it, and I want to see what you think about it. But starting off with the day, this is what pops up in my feed right off the bat, and you can see Citi comes out with their downgrades of the day, and it's lowered Unity's price target from 71 to 68, Roblox from 52 to 46, DraftKings from 26 to 20, and Disney from 165 to 145. And to show you what I'm talking about, what's kind of suspicious to me about this rally is everything's up. The oil stocks, shipping stocks, the ARC stocks are all up, right? High growth stocks. Banking stocks are up, right? Biotech is up. Travel stocks are up because they've been crushed, right? You got all the metals are up. You got uranium. You got crypto stocks up. And look, they're way up, like 20% up, right? The only thing down is trash stocks. Companies that pick up your trash literally are down, right? All your social media stocks, you end up got all your China stocks, your EV stocks, fintech stocks, the chip stocks are all going through the roof. The big boys right here, all way up. And, all your indexes up huge. Obviously, the VIX is down. And then you go into commodities, right? And we've been celebrating this coming down. All of them are up today, too, right? And they keep saying, well, yeah, oil going down is great. Well, oil's going up today, and the stock market's still going up. And what's funny about it is, I think what's happening is you're seeing, obviously a good technical bounce, but what's the QQQ trying to do? It's trying to fill this gap, right? It failed twice on filling this gap. It's filled every other gap out there that's down at these levels. And it's only about 1% away from completing this gap as I'm recording this video, which it might do tomorrow. We'll have to see, because they love to fill these gaps. And about ARC, one thing I found funny, I pull up a weekly on this one. I compare the ARC to the S&P, and guess what? I draw this trend line back to its existence. It bounced almost to the dollar off of that trend line, going all the way back to its existence. So it's bounced off this trend line many times back in the day, and that's exactly where it bounced to start this 10% rally up right here. And by the way, if you get anything out of this, please hit that like and subscribe button for me. I really appreciate it. Think about sharing the video. As always, guys, thank you for all your support. And we'll see where this rally is heading, and if it continues to have legs up, leading into CPI data, we'll see. We've kind of seen this movie before, but we'll see where it's going. I know the volume was like 6% lower than it was yesterday, and that volume was lower than it was the day before. So you're having this low volume too, but let's enjoy all we can. That's just how I look at it. So, going to the chart, I was telling you guys about how, when you see this chart, you're gonna understand, I think, like, wow, I really get what moves markets. First of all, okay, one of the top movers of markets, and this is plain day. I don't think anybody can really argue this. And then how history doesn't repeat, but it sure rhymes. And I'm going to show you that. And then, some silver linings here. What's going to actually play out here, okay, hopefully. And so when you look at this chart, this is the NASDAQ from basically when it came about till 2009. And then the end of 2009, we started going that huge bull run right there up to that peak. And until 2009, when the NASDAQ has been around for all these years, the government only ran up $10 trillion in debt, and the Fed only had a $2 trillion balance sheet, right? And you can see, you didn't see some huge moves going on from 85 to 2009, whatever. You see the huge crashes we'll get more into in a minute. But then it traded up. But also, if you look, if you bought anywhere near the top over there, you were underwater for a long time. But if you look at the move up here, all of a sudden, now in 12 years, the government added 20 trillion in debt, 7 trillion to the balance sheet. So this picture right here, when you look at it, ought to tell you what's the number one thing that moves markets. It's liquidity, it's free government money, it's cheap government money, and it's the Fed propping up the real estate industry by buying mortgage-backed securities and buying treasuries and bonds. Okay, that's why you see that trajectory. Look at the difference in the trajectory. Okay, and so now showing you how history actually rhymes. If we go back here to the 70s, 80s, and 90s, you can see right here, there's a channel, right? This is when we're going on a bull run, okay? And I'm going to zoom in so you can actually see that this actually is a move up. This is actually after we were coming out of high inflation and all this good stuff. And you can see there's the move going up, right? We zoom in because, I mean, not as many people are involved in the stock market as there are now. And so you look, there's your channel, right? And all of a sudden what happens? Bust out of that channel, just like it's all look very familiar. Look at this run up. Surges up, huge bubble, boom, bubble burst. Here we go coming down. If we scroll over, that looks somewhat familiar. The trajectory is a little off, but you can see on a smaller scale, that's basically what you're seeing right now. Now, what's cool about this is you'll hear people say we're still in a bull market, right? Technically, they're right. We're actually in a bear market coming down, but look at the channel. The channel we've been in for years now. We're just back down into that channel. So even if we sell off, I think it's another 20% from here, that still leaves us in this channel. If it turns up from there, we stay in that bull market channel, or whatever you want to call it, upward trending channel. And so that's what you hear people talking about. We're still in the run here, okay? We can still be in it. Depends on obviously what happens. But, you know, that's kind of where we're at. I thought you want to see that. So that's actually kind of good news when you think about it. Now, going back here to the 70s and 80s, this is inflation in the NASDAQ. Or, I'm sorry, inflation in the S&P, because the NASDAQ doesn't go back this far. And so if you look right here, you'll see when inflation started peaking there and it started coming down, the market did a huge run up, right? Then it starts heading, the inflation goes back up. So you can see, even when inflation comes down, it can spike back up. Okay, make sure you pay attention to that because that could repeat here. But you see Paul Volcker comes in now, right? When inflation gets way out of control, Paul Volcker comes in, does the Paul Volcker moment you hear about where he literally raised rates over 20%, said the heck with this, we're going to get it under control. And you see the market chop sideways or trade down as inflation is going up. But again, when inflation peaks, it goes up, or I'm sorry, inflation peaks starts to come down, it goes up 34%. But then, of course, what happens? He runs into a recession, the recession of 81 to 82. The market tanks about 27% and then proceeds to absolutely take off and just start ripping higher and ends up going up about 200 or basically 2xing in a matter of 4 years right there. And so that's what happens when you get inflation under control. And what's even better about this, look at what happened after that with inflation. As we scroll over here, you'll see that inflation never was a problem since then. We've never talked about it in my lifetime. The only time it even spiked over 5% was in 08, I believe it was, right there, and that was very quick. And, you know, then you keep scrolling over, and now all of a sudden, boom, we got a problem. And so a picture's worth 1,000 words. And so hopefully by looking at that, you know, a few things I would take from it is, yes, the government has to be involved in a big way, the Fed, in order to move markets up tremendously. All right, we can trade sideways, move a little bit to actually go, you know, parabolic like we've been doing on this bull run starting in 09. The government has to be involved. It's just the way it is, okay? And also the fact that if we can get inflation under control, the market's going to move higher. It's going to move a lot higher. But again, we have a Fed that is, I don't know, they're a hot mess. They're dealing with a lot of debt on top of it. So they can't do what Paul Volcker did, right? We didn't have that kind of debt back then, right? And so they're having to be a lot more restrained about what they're doing, which means it could take longer to get inflation under control. Plus, a lot of people are predicting the second half of the year, if China really does open up and stop the lockdowns, that's a lot of demand for oil, okay? And the reason why it's going down now is because people worry about demand. Well, China is obviously the most populated country, either them or India, but either way, it's one of the most populated countries out there, number one or number two. And so that's a lot of demand for oil. Plus, when it starts to get cold, what's going to happen with natural gas prices, right? They should probably start surging, especially with everything going on with Russia and, you know, what the games they're playing now. And so that could absolutely bring things up. And then again, if oil does start to surge again, you know, that's going to have effect on shipping costs because diesel fuel is going to go up. It's going to have an effect on food costs, right? And so, and plus, it also takes a lot of time for the prices to come down and work their way out of the system. And so, and you saw in the 70s what happened. They got it down to a certain level and then it went back up. And so we'll have to see if we're dealing with that as well, because guess what? If we do get in a situation where the Fed has to pivot all of a sudden and inflation is still extremely high, well, guess what? Is it just going to all of a sudden come down magically? No, it's not. That don't mean the stock market won't go up, because the stock market, it absolutely can do some crazy things. I mean, we've seen it before, right? And so it won't surprise me a bit. Let me know what you think about the charts and stuff. It kind of outlines in a way somewhat of what we're going through here and what's on the other side here. But another thing I took away from those charts is I said, and again, history does rhyme, and this ain't won't be the last time the government injects themselves into the stock market and see it go parabolic again. But as soon as I see it go out that channel and start ramping up, which it can last a couple of years, if you don't want to ride it back down again, you might want to get the heck out, right? And at least get out of certain positions or start taking profits when you start getting up there, because you've seen twice now what happens. And that's happened in the last 22 years, okay? I mean, in my lifetime. So, if you notice, these crashes and major corrections keep happening a lot more often, right? Because why? Because we have a lot more leverage and other things going on in the market that they used to have back in the day. And so, anyway, just wanted to put that out there to you. Hopefully you got something out of it. Hit the like, subscribe button if you did. I really appreciate it. And I'll see you guys tomorrow.